Well, it really is exciting because I wanted to give you a little history of the tax law changes in the U.S. because we need that. So in 1773, our country started as a revolt against British taxes. So it's all about taxes for our country. After the Revolution, there was no income tax. Taxes were collected through tariffs and excise taxes. But wars are expensive. So every time we have a war, we change the tax law somehow and start collecting taxes to pay for it. By 1936, the top tax rate was 76%. So it's really not that bad if you put it in perspective. By 1940, the top tax rate was 94%. And well into the 50s, the highest tax rate was over 80%. So in 1982, the Economic Recovery Act was passed by under President Reagan, and it was a huge tax code change, and it lowered taxes. And in 2001, President Bush did a tax cut and also gave us some tax credits that changed what's going on in our country with income taxes. So this year we had some broken promises with the tax cuts. They said it was going to simplify the tax code. I got news for you. No one is going to file a tax return on a postcard. So it said it was tax relief for working families. Well, maybe a little bit. Not as promised. And it said it was going to close loopholes for wealthy taxpayers, but it actually created more. So I know. So who benefits from this tax legislation? Well, the top 1% of taxpayers. And I looked up what the top 1% is because they always talk about the top 1%. It's anybody that makes $3.6 million a year or more. And I got news, it's no one in this room. And they get a 62.8% tax cut. The bottom 60%, anybody earning less than $80,400, gets a 6% tax cut. So how much is that? These are the new tax brackets. I'm going to skip that because everybody's seen them. But if you make less than 25 grand, you're going to see $60 of tax savings. 49 to 86,000, $900. It's really not that big. And then if you make 308,000 to 733,000, you'll get 13.5, and people that are the top earners get $51,000. So there's good news and bad news about this new legislation. The standard deduction increases to $12,000 for individuals, $24,000 for a married filing joint, but no personal exemptions. And no one's really stressing that, which is a big deal for people with kids in college. So married filing joint in 17, your deduction is $20,800. In 18, it'll be $24,000 with no kids, counting the exemptions. If you have 2 kids, it's going to be $37,000 in 17, but it's $24,000 in 18. So that's an increase of taxable income of 13 grand. The other thing is the child tax credit is doubled. So instead of $1,000, now you get $2,000 per kid, but they have to be under 17 to enjoy that. But a tax credit is better than a deduction. So AMT goes up to $70,300 for individuals and $109,400, which is great news because it hadn't been increased since the tax legislation 30 years ago. The health care mandate is eliminated in 2018, so no penalties for not having health insurance. The changes to itemized deductions are big. Medical expenses goes back down to a 7.5% threshold for 17 and 18. Goes back up to 10% after that. You can only deduct $10,000 of property taxes, and you can only deduct mortgage interest for mortgages up to $750,000. Miscellaneous itemized deductions are gone, so you can't deduct tax preparation. There's a tax break for recipients of alimony after 2018. So from now on, the person who pays the alimony pays the tax on it. I don't know if that's good or bad. Dennis can tell you that. So there's plenty of other tax breaks if you qualify. If you're a corporation, your tax rate is down from 35% to 21%. If you're a pass-through, which is most of us, small businesses, Schedule C, 1065, 1120S, rental income, you get a 20% pass-through deduction, except for accountants, lawyers, consultants, athletes, financial services, and brokerage services, unless you're under a certain threshold, with most of those people aren't. Bonus depreciation goes up to 100% for 5 years. Sections 179 depreciation is increased to $1 million. And there's a credit for employers who pay family and medical leave. The really fun stuff. Private aircraft owners can deduct payments for management services, fueling your plane, storing it, as well as weather forecasting. Brewers, vintners, and distillers have a piece called the Craft Beverage Modernization and Tax Reform Act. Citrus growers get tax incentive to replant damaged trees. Section 529 plans are now able to be used for kindergarten through 12 to a certain extent. And Kyle will explain to you about the estate tax exemption doubles to under just $11 million for individuals. So stuff to do now. Prepay your property tax and real estate taxes, but you got to check with your tax collector because my friend tried to do it in Florida and they won't take it. Prepay your January mortgage payment and deduct the interest in 2017. Make more charitable gifts this year. Refinance your home equity loan. I just added that because home equity interest is not going to be deductible. So you need to roll it into your regular mortgage. And start divorce proceedings as soon as possible. Because if you get divorced quickly, you will be able to deduct the alimony. Planning opportunities for next year. Evaluate changing your existing form of business. So that's something you can talk to myself and Kyle about. If you don't have one, create a pass-through to take advantage of the new deduction. Consider putting subcontractors on payroll. You got to run the numbers to see if that makes sense. And I still think the S-Corp is the way to go. That's it.